Welcome, everyone, to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. We are talking about critical minerals today. That's right. Critical metal, silver, as well as gold. We help people hold physical gold and silver in registered accounts, fully allocated, fully segregated, held outside the banking system. Why does that matter to you? Because your dollar is losing purchasing power every single day. And the more you see governments spending money and going into debt, the worse it is for you. They just lowered interest rates this week in Canada. Guess what? Some people are celebrating. What it really means is that you're going to pay more for everything that gets imported into this country. So you need to have an asset that is inflation proof, and that includes having some physical gold and physical silver. My name is Jeremy Wiseman. With me is Jerry Correa. Jerry, hello. I was talking to a client today looking to get involved in registered accounts and just noting that, I mean, how easy would it have been to just hold gold in a portfolio for the last 20 years and be up 800+%? Exactly. You know, or to have silver and be up good. 500+%. Gold reached its inflation adjusted high this past week. Silver, its inflation adjusted high is somewhere in the $200 range. So we've seen big moves in the market. Is it all over? Should we be trading in our gold and silver? Where are we at with the bull market? And what kind of topics are we going to be discussing today?
We have a few things to discuss. A lot of news coming out of China this week. We've talked about silver a couple weeks ago being designated as a critical mineral in the U.S. Well, China is going to be has a new designation for its gold and its gold holdings. That's what we're going to be talking about. We also have some news coming out of the China market, the gold market. We know it's one of the largest markets in the world, and it's in shambles right now. We talked a little bit about that about a month ago, Jeremy, in the city or town called Hubei, which is in the Shenzhen province, and it's the largest gold wholesale market, and it's crashing right now. And Fed news, a lot of flip-flop, and a lot of Fed news we'll be discussing. But going forward, what does this mean about this market? We're seeing pullbacks. What should we do? We'll answer those questions in today's show.
And so where are we at in the bull market, Jerry? Are we at the beginning? Are we at the end? What's the consensus out there from all of the analysts and experts that you follow?
From various traders, well, the ones that I watch, it's a 50-year market. It's a 50-year cycle that I'm watching. We've seen 2 gold cycles, and we are very close to the tail end of the third cycle. This is where I see it. But there are other analysts and traders that see this is just the beginning. But you know what? I don't see the thing ending. You know, this is a very different cycle in precious metals, where the previous 2 cycles in gold and in silver over the last 50 years, we've seen 2 from 1970 to 80, and then from 2000 to 2010, if I can get that out, had pullbacks. However, this time around, these designations mean a whole lot for the U.S. in their critical minerals push. It's a critical thing. And this is an element that, as the Oriental Ghost put it best in one of his posts, that silver will be the first depleted element on the periodic table. So out of all of those elements that we learned about in chemistry, there's going to be one that's missing, and that will be the silver market. But I don't see the market pulling back. I think it'll have to maintain certain levels to support and hold everything up in Exter's pyramid. All of those derivatives that gold and silver are going to be backing up and collateralizing and protecting is going to be held up by physical precious metals, the very foundation of a very rocky financial system.
So the can has been kicked down the road far enough, and now it's time to make a big change.
Lots of cans.
the precious metals the precious metals industry has been taking a long look in the mirror and seeing how they're going to make changes. And for us, yeah, you know, when you're talking to people and you say, you know, debts are big, there's uncertainty. These are and were the main reasons to be getting into the market over the last decade plus. But now there's the future of the markets and the re-monetization of physical gold and silver to a certain extent. And then there's the new industrial usages it used to be, hey, look at all the silver being used in solar, look at all of it being used in batteries, and that's always going to that's going to continue to improve, I believe. But it's the new technologies. We've said this before, but for new listeners to our show, we really believe that the future in the metals is going to, especially demand on silver, is going to reside in AI and needing processing power and new technologies that may come out to power the AI economy. So, and that's got nothing to do with the remonetizing of gold, for instance.
A whole separate story.
Which when you've kicked the can so far down the road, how do you bring trust back into the system is the question. And how do you navigate through the debts that have been created over the last 30, 40 years? And that's where gold has really been starting to play a role. So even with gold at, and to be honest, I'm sorry, I'm not quite sure what the price is today. It's moving so much. I keep thinking it's 35, but I'm not sure.
We're in the 3,600 level, Jeremy.
We're now
3667.
I now just think in ranges. It's like it's either 35 or 4,000. So speaking of that,
we're breaking all-time highs almost every day, Jeremy. I don't blame you.
What's our chance at 4,000 this year? Someone asked me yesterday, what do you think of the market? I said, if we don't move up an inch more than where we've been this year, it would be a great year for us, a great year for our clients, and a great year for the market. Anything else right now is pure icing on the cake for me. But for someone new getting into the market, what's the expectation? Does this market run to 4,000 and call it a day, or that type of thing? What are your thoughts, sir?
Well, the investors have done fairly well in the markets. This is just the beginning, but we need this to continue, and this will continue for precious metals, and congratulations to those who are up. But considering the moves this week from the Federal Reserve cutting interest rates, people are very, celebrating this like it's something great. No, what happens is your currency is losing much more purchasing power, and what's even worse is that the planners and the statisticians and the BLS who have revised jobs downwards and continually gaslight us Canadians and Americans, letting us know that inflation is cooling down, yet we're paying much more for pretty much everything around the world. And, we can't just settle for, these are great gains, Jeremy, that we're seeing over the past 2 years in gold and silver, up nominally average about 80% between the 2 years. This has to continue, because what is the actual rate of inflation here? We have to fight about 10% per year. We need that inflation, that rebate. We need to grow our portfolios at least more than we calculate as more than 400% in the next 20, 30 years if you're looking to really reap the benefits of having this RSP make sense for you. We have a lot of individuals that want to pull out of the RSPs early and pay the tax now. So people are strategizing all because of inflation, all because of our assets being denominated in a currency that literally is on fire.
I was listening to Rafi Farber. He did a video last week, and it was all about basically inflation is the root of all evil, right? Because you borrow money and you start losing your morality and losing your navigation, right? Your true north, because you don't know what things are worth anymore because inflation has masked everything, right?
Yeah.
People are still worried about confiscation, and you say, listen, when you put all your taxes together and you're losing 60, 70%, that's confiscation right there, right off the top. Right?
Yeah. And the numbers say 3%, but the grocery bill says otherwise. Here's some stats. Coffee prices are up 20% year over year. Steak, 16.5%. Ground beef, even nearly 13% up. Eggs, 10%. Oranges, love oranges. 10%.
It's sad. It's sad. You've heard the stats about how many people are using food banks. My wife was at a grocery store just yesterday, and she's, the people in front of her were having to take stuff out of their bags. Like, this is not the Canada that we expect to be living in. And it really is disheartening that people aren't aware of the sort of the action and reaction, the simple economics of how these things come to be. They just expect that the expectation is where they were 20 years ago or 10 years ago, just not living in the reality of seeing, or just that things are happening, but we're not sure why.
Yeah.
And there's no questioning of why. It's just, this is life.
Yeah,
This
we know
is-
why.
And we believe different, because we believe, number one, protect your wealth, grow your wealth, get opportunities, and you be the savior in a way. You build your community, right? By being a success.
Yeah.
Right?
Of course. Become a success and understand what the enemy is using. We are under attack here. We are saying it often. We're on our own. And as Rafi said, yeah, you know what? The root of all evil is money, but what they have done to the money, and not having weights and measures to the money, and not having proper barometers and stats that we can rely on. Everything is a shine, a lamb. You are on your own.
Yeah.
And when you have central planners this week that are cutting interest rates, saying like Jerome Powell cuts interest rates 25 basis points. He jawboned his way through the whole thing. He actually said that we expected the 1 million jobs revision.
Okay.
They expected it. They knew it all along. The Federal Reserve is totally in control.
So,
But it was less than the 50 basis points that
Right.
that many banks call for, which is why we're seeing a
But
slight
they're
pullback,
expecting more.
a pullback in the metals market. But the dot plot saying that there's going to be further rate cuts. This is a rate cut cycle. So this is a cycle for precious metals because we perform, not us, you and I, Jeremy, but the metals do perform during times of rate cut cycles. And during that time, yes, that's when you and I will be performing.
And you know, the gold prices came down right off those announcements, and a client called me about this, and I let him know that, you know, during the time of Greenspan, when he was raising interest rates a quarter point every time the Fed got together, it was random. The market might move up, the gold and silver market might move up one day on the announcement, and it might move down on one day on the announcement. It doesn't matter. It's the bigger picture. The bigger picture is, in this case, they're yielding to inflation, right? They're showing you they're not really willing to fight the inflation anymore. And I believe they changed their targeting of inflation too, right? They lifted the 2%, something like that.
Yes, and they updated their dot plot showing consensus forming around softer future inflation. But the markets are interpreting the Fed stance as pretty much dovish, driving gains. And for us investors in metals, this environment lowers the opportunity cost for holding gold and silver temporarily. But you're going to be seeing money flows into hard assets to protect against the devaluation of the currency. These central planners will contradict over and over again. And while they do that, you need to flip and convert out of that type of system, convert out of their system into physical precious metals. And you want to do that with Guildhall Wealth.
You know, when every dollar counts, it's good to know that holding physical gold and silver takes away counterparty risk, that they're a finite asset. They've been around for thousands of years, and they are certainty in uncertain times. Take the important first step and give us a call. The number 18778-SILVER, the website guildhallwealth.com. We'll show you how to get involved in actual physical precious metals, which is the only way to own gold and silver rather than in investing in gold and silver. And we'll show you how to hold physical gold and silver in registered accounts like RSPs, TFSAs, liras, LIFs, RIFs, even an RESP if you're thinking of one day sending your kid to a university. The number again, 18778-SILVER, the website guildhallwealth.com. Jerry, we were starting in the last segment just discussing where we are in the bull market, and while we believe we're actually kind of just getting started as we're starting to see the market move, we're not the only ones recommending physical gold. We're not advisors. Talk to those who you trust. But there's a lot of banks getting into the market. We have Deutsche Bank has raised its 2026 gold forecast to $4,000 an ounce. Morgan Stanley, CIO, says that the 60-20-20 portfolio is dead, and that gold is now a stronger hedge than treasuries.
That was from Goldman Sachs, too. He repeated Goldman Sachs' strategy.
Yeah, let's just repeat that. Gold is now a stronger hedge than treasuries. And if with interest rates coming down, as you so eloquently put it in the last segment, Jerry, it lowers your cost and risk to having gold. So why wouldn't you own gold if the interest rates are lower? So more and more are getting involved. there was Jeff Gundlach. And for those who don't know who Jeff Gundlach is he was working with, George Soros when he was still not the public enemy number one, but when he was just a successful hedge fund, Gundlach was working with them, and he worked with the vice president, worked under him, right? So he's been a big believer in gold for a long time, and now he's saying 25% of your assets should be in gold. 25% of your assets should be in gold.
Mm-hmm.
Wow, that's a big statement. What do you make of that?
Well, I think that's a obvious statement. The percentage that was used a long time ago as to how much precious metals you should be owning was about 7 to 15%, and that allocation percentage came from the Ibbotson Associates, and that was a report that was done a long, long time ago, before QE, and we're approaching QE5 apparently. So I think the argument for a higher allocation, there is a lot of disruptions in the market. We have the fundamentals shouting, the old fundamentals of geopolitical concern, where we have gold, according to Zoltan Polzar. This was just before the Ukraine and Russia war. The crisis is unfolding and a commodities crisis is happening. And he said, when the war is over, money will never be the same again. There is a transition and changes and resets happening with money. The definition of what collateral is changing. What is a quality asset in your portfolio? What's a quality asset for reserves for banks? Where can we find trust when trust is gone? And this is it. Trust has diminished. We've known this. We've known this for a long time. When people were rushing for toilet paper and they couldn't wrestle the toilet paper away from Granny fast enough, we are heading into a new territory, one where with lowering interest rates, your GIC rate is just getting lower. We're getting 3.5 now. Well, guess what? It's going to be lowered now. So the fight is on to protect your wealth. And the argument for a higher allocation, I think 25% though is still pretty low. I would argue for a much higher allocation, Jeremy. I don't see where is a safer bet. Yes, you do like dividends. Yes, you do like yield. It looks good. It feels good that you're doing the norm, but this is not normal territory.
Well, look, we don't know where the stock market's going. I hear all this information that insiders are selling. You get these mixed signals because it also seems like the markets are so strong, and you're wondering, well, where's the money coming from for all that? If supposedly all these insiders are selling. So, but you do get people speaking to you saying, I'm concerned about the stock market. But if you're long-term, you're long-term, right? Again, we're not here to be advisors, and we're not here to say that gold and silver is some sort of panacea. It's a great hedge. It's performed well. It's still early in the bull cycle. When you look at the debts out there, you look at where it is for the Exter's pyramid, as you mentioned, inflation. Again, the debts are over 300 trillion in the world, and how are you going to take care of that? Well, central banks I believe, because we've heard them talk about it, the head of the Dutch central bank, we've heard the Treasury Secretary hint at it, that revaluing gold is one of the best ways where you're saying, look, we don't have to worry about the debt if the asset side of the balance sheet is worth triple.
You had the Federal Reserve publish a paper. The Federal Reserve never talks about gold, and they actually published it on the Federal Reserve the website, so you can go there and read. It's public. Read what the Federal Reserve published. They published past examples where countries actually use their gold reserves to get themselves out of fiscal deficits and troubles without having to sell. Imagine that. You don't have to liquidate that one very winning thing in your portfolio to get on top.
Okay, I see what you're doing, Jerry. I see what you're doing,
saying,
buddy. You are trying to create an amazing segue to what's the term we're talking about this week? This week's term of the week?
HQLA.
HQLA.
Do you have any? Do you have any of that?
I have some HQLA. Do you have some HQLA?
I have a lot of HQLA.
Nick's here in the room. Nick, do you have some HQLA?
What is that?
What is that? He says.
Well,
he does. He doesn't even know it, but he does.
Yeah, you do.
What is HQLA?
Well, Vince Lancy reported this week, first through Eric Young, King Kong, and Bao, the Oriental ghost on China's potential move. So on X, it was reported through Vince Lancey's Gold Fix, highly recommended. He's a formidable trader, and he knows his stuff geopolitically. He knows his equities, but we're focused, like many bankers today, like Goldman Sachs, you name Deutsche Bank, and all these other banks that are revising, even TD Securities, Daniel Galley, commodity strategist.
No, Vince is a great follow. The geopolitical angle he understands, and he also understands his trading. He's really one of the best that we appreciate.
Absolutely, highly recommended. So he reported on China's potential move to designate. So we know that the U.S. designated silver to be a critical mineral. That's a huge one. Well, China's move to designate gold as an HQLA. What's that? High quality liquid asset for its repo market. What he thinks it would mean and why it matters, you're gonna follow that. But what it basically is being proposed is China is going to move to allow gold to count as an HQLA in its repo market and collateral framework. Repos basically are short-term borrowing arrangement overnight where one party gives collateral, example, treasury, in exchange for cash. We know what's going on with the treasury. It's being dumped. It's fiat. Designating something like as HQLA makes it more acceptable, reliable, liquid as collateral. Remember, you mentioned zero counterparty risk. And we remember pre-COVID, in 2019, it was the repo markets, as reported by Rafi Farber, that could have brought the entire system down. They needed that high liquidity to bail each other out, bail these institutions out. And and Vince Lancey said it bluntly in his missive. China will blockchain the gold. That solves the storage and logistics problem that's been around for decades. And he's right. The reason treasuries dominate right now is because they're easy to move. But this is huge because it's challenging the dollar. I don't have to hold a treasury anymore. I can hold gold. Other countries can hold gold. And this could potentially lead to all roads leading into China. Liquidity, financial stability. It makes gold HQLA in these repo markets, enhancing liquidity. It answers all those questions of risk, overheating liquidity markets. In times of stress, as we are seeing, gold is going to serve as a reliable collateral asset. Gold is the best collateral. It's beyond tier one capital, and it's offering alternatives for countries. And if they don't want to deal with the U.S. dollar, I wonder why they wouldn't want to deal with the U.S. dollar.
And look, the fact is that it's beyond math. It's not just the math on physical gold. It's the fact that it's been around for thousands of years. It is a liquid asset. It's always been considered real money. It's got the lowest stock to flow ratio. It is malleable and all of these things. But if you can hold it in a bunch of different vaults that are blockchain together, then it makes it easier to say, okay, just take whatever, because all of the different vaults are connected, right? Mm-hmm. And that's what China's looking to build out, and that's why we've been monitoring this trend of vaults being created around the world. In fact, I saw, Jerry, because you mentioned it on our show when they were talking about tariffing gold, you said, UBS is looking to, I think it was UBS, is looking to create a refinery in America. Mm-hmm. Well, that story came back last week. Mm-hmm. That's legitimate. They actually do want to help build one in
PAMP.
Yeah, PAMP.
Yeah.
Okay, not UBS, PAMP. Yeah,
they're going to be making moves to combat the tariffs, but the vault story was the big one because they're going to be linking each other up, and they're going to have certain standards, the continuous chain of integrity that we are concerned about, that we advocate here through Guildhall, which is why we only offer LBMA approved product. It's going to be the same standards across the board. We'll also include Chinese refineries, but it's also ultimately going to push the Western regulators. I think I see this as, okay, this was my chess move. USA, you're next, because the USA is going to have to reconsider their stance on gold's regulatory treatment. Yes, they're researching stablecoins. Yes, Judy Shelton was talking. Yes, they're discovering the means by which they can create a gold-backed treasury on the blockchain. I think the setup is already built. Well, you just have to have public opinion And people who hate the gold standard and hate gold, as Ron Paul said it best, what did he say? He says,
it's disliked by dishonest people.
Gold standards disliked by dishonest people. And that's what it does. It brings weights and measures and controls back to the money, preserving your purchasing power, and it puts the reins on what they can do.
But in this, and as well, in this case, with the putting it on a blockchain, what it could potentially do, in my mind, is it takes away the idea of having a central vault like the Vault of London, where instead it's all of these participating nations can have physical gold, and you could pledge the gold, put the gold into whichever vault you want, but it's on the blockchain, so it's able to transport around the world without it moving, because it's in the vault that's approved, right?
That's right.
So
that's exactly what they're doing.
I'm wrapping my head around it, but the idea, of course, is that China's moving towards making gold even more integrated into the financial system, as they want it to be a high-quality liquid asset. So HQLA, this is very similar to Tier 1 asset. This means pledge your gold, get the cash. This is how we're going to create loans, and you've got the collateral, and that's the key. It's not a collateral that you're going to be, if you put two sets of collateral under your bed, Jerry, the gold and the cash can be printed into oblivion. It's not necessarily great collateral, but the gold is definitely HQLA, high quality liquid asset. So talk to your friends at the dinner table. And when they say, you have gold, you can respond and say, well, do you have any HQLA?
Do you? Yeah.
Do you have HQLA? I do, but you don't? You don't? What's wrong with you? You should call Guildhall, 1-866-778-SILVER, the website guildhallwealth.com, to get some HQLA in your portfolio. We are advocates for the gold and silver market. We were talking about gold being considered now a high-quality liquid asset. China wants to help get it onto a blockchain so that countries around the world can pledge it as collateral, and this can help kind of get loans going and things being more stable and reliable. And so we're definitely pro on that. Jerry, I was thinking about this idea. The quote, right? Hard times create strong men create good times create weak men, and weak men create hard times.
Yeah. The cycle of the generations.
Yeah, we can talk about which period we're in right now, but there was an article on Zero Hedge which made me think about this statement. Which was why the hardest money always wins.
Ooh, that's good.
So we know that gold is the hardest money, right? So I was just kind of wanting to think about that. This idea that weak money creates weak economies, and hard money creates good times.
Very true.
And I think that that's sort of what we're talking about. That the hard times that we're currently going through is creating gold demand, which will ultimately bring stability, which will lead to a complacency eventually, which is going to lead to more. They'll bring back paper promises, and that'll end up leading to hard times again. But this is the opportunity. The opportunity is that there is a gold demand right now. There is a demand to create stability that the weak money has created hard times. And we need the hard money to create good times.
Yes, absolutely. I do see that happening. And the weak money, which is the paper money, created the hard times through Keynesian policies, weak, loose monetary policies, print as much as you want, send money here, there, and everywhere over to Ukraine for Chrystia Freeland to go land a job over there. And it's all happening, but we're seeing the rush towards real things, real stuff, because you're creating more and more opportunities even though it could be cannibalizing the AI craze, but it's creating more and more opportunities. The data centers that are being built is creating opportunities. The new mining, if we can somehow get mining up and going here in Canada again, and not having Newmont and Barrick Gold fleeing our woke nation and rebuild, you'll get jobs blowing up. But guess what? If you want a new excavator, you're not going to use a solar powered woke excavator. You're going to have to dig a few holes to get the minerals that you need for your AI, which is going to bring everything up together. As much as you are going to advance technologically, you do need that hard money to come out of the ground first, and which will grow, I think, in a good balance, Jeremy. So
I had this part-time job when I was in high school.
Where was that?
It was like Kelsey's or something like that.
Sure beats
and I was
Woodchucks.
I was doing the chicken wings and the club sandwiches. It was fun, and I got to work with this really cool guy, and he used to just like be philosophical with me the whole time. But he said something I never forgot, man. He said,
What's
"A
that?
promise is comfort to a fool." And all we get are promises, man. Promises. You know, or rallying around the flag, right?
Very true.
Creating crises and rallying around the flag. And you know, at Nuremberg, the Nazis testified that that's what they did as propaganda. Oh yeah, we rallied people around a crisis, around some sort of enemy, so that they would come together. Mm-hmm. It's amazing to witness how people can be used, and you know, we as people who are in the gold business just somehow are part of a political process where we wake up a lot and we keep learning new things all the time, and it's interesting to see. And you definitely see that times are changing. You know, it looks like this past day where you see entertainment hosts of TV shows being let go because they've been gaslighting people and giving disinformation forever. And it's nice to see that the companies no longer want to put up with it, because ultimately it's bad for profits.
Public opinion.
You're getting rid of more than half of your viewership when you lie to people.
You're losing subscribers. You got to maintain those subscribers. That residual income has to keep coming and flowing in. Did you see the Nuremberg?
The difference between ideology or no, but you and I were talking about this, that we were saying, wow, interesting
movie.
Is that a Ghost in the Machine thing where they're bringing out that movie? They did have a similar movie in 2003 or something, but to do it again at this point is a very interesting timing, especially with like, you know, stuff that RFK is doing, whatnot. But we're not talking about gold anymore.
We're not going there.
But you know, it is
that's a chat for the office.
Yeah, precious metals are a political metal ultimately, because money is political. You know, and you can see the games they play with the money system, and you see the effect of it, and you also see that, you know, as like a Jim Rickards has said wonderfully in his books, that there's always been a de facto gold standard. If you don't like what you're seeing in the currency, you have an exit strategy. You can hold gold, you can hold silver. And for those who have looked at the world or looked at their portfolio, looked at the money in their bank and said, something doesn't feel right, and I want to exit this, and I'm worried about my portfolio, whether it's I'm not getting the gains or I'm worried about it falling, then having this insurance policy in your portfolio, you know, you have home insurance, you have car insurance, you have life insurance. Well, what kind of insurance do you have against the devaluing of your currency?
Yep, that's exactly it. And Kevin O'Leary said that quote. He's like, I like gold because it's a stabilizer. It's an insurance policy. And Herbert Hoover said, we have gold because we cannot trust governments. That's what he said. Apparently not.
Well, they got to prove themselves to us at this point, and you got to prove it by doing smart things. And until that happens, you want to hedge against it and insulate yourself against it, and that's where gold and silver have come in. And that's not a brand new sentiment here. That's central banks are doing that. Countries are doing that. Sovereign wealth funds are doing it. You should see the guy who runs the sovereign wealth fund in Russia.
Right.
His whole Twitter feed is pro-America.
Yes.
It's wild, man.
Yes.
It's wild. Lots of good things happening in the market, and we feel like this is a good time to be getting involved. Yes, there's been a lot of progress over the last 15, 20 years, but you're at the starting gate in many respects. So
things are
consider
resetting.
giving us a call. We'll walk you through. We'll give you the pitch on precious metals. The number 18778 silver. The website guildhallwealth.com. That's to have a strong, solid foundation to your portfolio in your registered account, your RSP, your LIF, your RIF, even your TFSA, or to just buy some and take some home and have a little bit of physical metals as sort of your cash on hand. We'll help you through it. The number again, 18778 silver. The website guildhallwealth.com. Jerry, Gold Silver HQ posted on X yesterday that they put up the CPI inflation calculator of silver based at $50 from January 1980, and the CPI inflation adjusted for silver was $206.
There you go.
It makes sense when you think about we've talked that over the last 20 years, gold's up 800%, silver's up 500. There's got some catching up to do. The ratio, it's 80 plus to 1. It's got some catching up to do, right? You need over 80 ounces of silver to buy an ounce of gold. You know, at the peak in 2011, it was 35 to 1. In 1980, it was 16 to 1. They're pulling it out of the ground at 8 to 1, and you wonder why there's a deficit, why they're using more silver than they can mine. Because it's harder and harder to mine.
Well, Daniel Galley, the TD Securities commodities strategist, says with the demand, they expect to see the supply the squeeze happen again and supplies to cut within months. So they can be depleted within months, and he expects that silver to gold ratio to drop 10% within this time, which would put us into the 70 zone from 86 to 1 silver to gold ratio down into the 70s. And that's when you start seeing that acceleration, that velocity, that uptick in precious metals. So we are percolating here. We're watching this play out, and we're watching all of these trends. It's historic.
And there's something in the zeitgeist there, because Nikki Shields on X also posted the same thing. She said silver's not even close to its inflation-adjusted high price of $200 an ounce set back in 1980. There was another one that you put out on X from Routers. India's silver imports to gain momentum from strong investment demand. It's interesting also to note that central banks are happy to be buying gold at these prices. That should tell you everything you need to know.
Yes.
They're not waiting for dips in the market. They're happy buyers at this current price. Before we jet for the day, let everyone enjoy their weekends, I wanted to share a quick little story with you, Jerry. So I had a client email me, who bought a couple of pink diamonds, several years back, over 5 years ago. And one was, for example, it was just over half a carat, fancy intense pink, VVS.
Wow.
And I put into ChatGPT, hey, can you find me something similar, not lab grown? I had to make that specific, but try to find me something, okay? And you can see it working, right? And all I see, Jerry, was Guildhall icons coming up, and it was no. Guildhall, here's like a few, and it was from Guildhall. Not even one of our competition out of Israel.
I need to tell it,
Nothing.
Go somewhere else. Keep finding. Keep looking.
There's no doubt that these are incredibly rare assets, and the value has gone up. And that, as we talked about, the world moving from fake everything, even though AI is growing and all of that, there's a lot of fakery going on, but the appreciation of real things and real assets to bring trust back into the system. I believe that as we start to see success, and I believe that things will get better. I believe you will start to see things get better. I mean, I hope they don't get much worse. Let's put it that way. From what you see,
How much lower can we go?
you see looking around what's happening. But as people start to get money back in their pockets, I think they'll appreciate having real things and real assets. So I believe this is a great time to get involved in a natural fancy colored diamond, because I think the pricing's good. They're incredibly stable. You had the dot-com bubble, the savings and loan crisis, the great financial, what do you call it? Like the
Great financial crisis.
Thank you. I missed the word crisis. Always a crisis. And the diamonds don't go down. They're just strong assets, and people will spend tens of millions of dollars at auction for these assets, because you can only have so many houses and so many things in the stock market, and you can only own so much gold. What else do you have? You know, you've got to have other assets. And what's interesting about this market as well is markets can move fast and slow. You get the impression that everybody wants to chase the fast stuff. People who have been in the market for a long time, know that it's slow.
They
right?
do.
They've been holding on to their bank stocks for 20, 30 years. They've been holding on to their index funds for 20, 30 years. They don't worry about what's going on short term, right? Sometimes thinking long term is a great thing. Sometimes thinking generationally is a good thing, right? China certainly does. They don't think in 4-year cycles. And it's great to have some assets that move slow as well as fast. So when you think of art, fine wine, natural fancy colored diamond that you could wear and enjoy, we have clients that have been producing some jewelry. Oh my gosh, they're so nice, Jerry.
Yeah.
They're so beautiful. You got to see. I got to take some pictures and put them up online. I digress. Any last words about precious metals, colored diamonds? What are you feeling? What are you seeing?
Well, just going back to the Fed, they're signaling rate cuts. And when we talk about rate cut cycles, we often talk about silver and having it gain over 413% during the last 3 Fed rate cut cycles. And this is going back decades. We have to remember, you mentioned slow, fast. I think what's going to happen quickly is the depreciation, the devaluation of our currency. And that's the beautiful thing. And that is the smart thing with natural fancy color diamonds. You are parking your wealth away from the volatility that's upcoming, the rate cut cycle that's upcoming. And there's going to be tremendous opportunity. I remember in 2011 when the silver price went up to $49.50, people took profit. Some people followed our recommendation or our strategy of getting out and reladdering in, and some took profit and went into a diamond years ago, and many people were able to even sell that stone after a while. But this is about generational planning and building. You want to own assets in an age where AI is just on fire. I think this is the retro that we want to hold on to. It's the classical. It's the style. You want to hold something that is timeless, and there's nothing more timeless than a natural fancy color diamond with Guildhall. ChatGPT it, look it up, use some of that silver in your data center bot, and figure out that this is where you want to park your wealth into HQLA, whether it be precious metals with Guildhall or natural fancy color diamond. Get in touch, request your diamond discovery session, give us a call at 1-877-8-SILVER, or check out the inventory that we have at guildhallwealth.com and find out through the session on how you can add a natural fancy color diamond like that blue diamond you sold today. Jeremy, congratulations. Brings a tear to my eye. I wanted that one in my portfolio. I really did, but congratulations to the new owners.
And if you've missed a show, check us out on YouTube, check us out on Rumble, follow us on Spotify, follow us on X. Thank you so much, Jerry. Thanks to all our listeners for joining us and spending some time with us, and we can't wait to speak to you next week here on The Real Money Show on 640 Toronto.